Individual savings accounts, ISAs, are a popular way for UK residents to save and invest money without paying tax on interest, dividends, or capital gains they earn. With several types of ISAs available, it's important to understand your options and how they align with your financial goals. This video will break down the different types of ISA in comparison to your financial goals, your risk tolerance, and assessing your time horizon. Here are the different types of ISAs available. Cash ISAs. Cash ISAs are savings accounts that allow you to earn tax-free interest on your deposits. They're typically offered by banks and building societies. They're considered low risk, and you can withdraw your money whenever you need it, making it a flexible option for short-term savings. Stocks and shares ISAs. Stocks and shares ISAs allow you to invest in a variety of assets, with the capital gains and dividends earned within the ISA being tax-free. However, investing comes with risk and returns are not guaranteed, with this ISA being more suitable for those with medium to long-term investment horizons. Lifetime ISAs or LISAs. Lifetime ISAs are designed to help individuals save for their first home or retirement. You can open a LISA if you're aged 18 to 39 and contribute up to £4,000 per tax year, with the government providing a 25% bonus on contributions. These are the different factors to consider when picking what ISA to use. Number 1, assess your financial goals. If you're aiming to buy your first home, a lifetime ISA is likely your best option due to the government bonus. The 25% boost can significantly accelerate your savings for a deposit. For building an emergency fund, a flexible cash ISA is ideal. It allows you to save safely while offering easy access to your funds when needed. If retirement savings are your focus, a stocks and shares ISA is a choice for long-term growth, making it easier to adapt your portfolio as your goals and risk tolerance evolve. If you're eligible, you can also consider using a lifetime ISA to supplement your retirement savings. For those looking to grow their wealth over the long term, a stocks and shares ISA can provide potential returns. Number 2, understanding your risk tolerance. A cash ISA or a conservative stocks and shares ISA may be appropriate if you prefer stability. If you're comfortable with some risk for potentially better returns, a diversified stocks and shares ISA can provide a balanced approach. For those willing to accept volatility for aggressive growth, possibly consider a more aggressive stocks and shares ISA. Number 3, consider your time. Your investment time horizon will also influence your ISA choice. A flexible cash ISA is ideal for immediate access. A combination of cash ISAs and stocks and shares ISAs can help balance growth and security for those with a medium time horizon. A stocks and shares ISA can be a good fit for long-term investments, allowing time for your investments to grow and recover from market fluctuations. Investors should remember that selecting the right ISA is highly personal and should align with your specific financial goals, your risk tolerance, and your investment time horizon. The options mentioned above are just examples. You can choose any type of ISA that suits your needs, provided you've conducted thorough research. Open a flexible stocks and shares ISA with XTB today and earn a boosted interest rate of 6.5% on your uninvested funds for the first 90 days after opening the ISA. This offer runs from March 1st to April 30th, so it's a limited time opportunity to maximize returns on your savings. Terms and conditions apply. Subscribe to XTB to learn more about trading and investing.